After speaking with clients throughout the years, there are about 4 or 5 mistakes I see clients make when it comes to banking that really should form the core of best banking practices for anyone, especially in this day and age. Hi, welcome to CHN, and today we are going to be talking about best banking practices. The first one is making sure to always review bank statements. Oftentimes, months later, clients are finding fraudulent mistakes by third parties or hackers or even bank errors. I have had clients who maybe 4 or 5 months down the road are looking at bank statements and discovering withdrawals they haven't authorized. They are discovering withdrawals by the banks that were really errors from the banks. Oftentimes what scammers will do is when they get access to your account, they're not always withdrawing huge chunks of money out of the account. Over a sustained period of time, they are taking out small amounts that add up to a lot. And if you are not consistently reviewing your statements, you are going to miss those. Also, banks have a habit of suddenly springing up unnecessary fees. Sometimes they change their terms of their accounts or the types of accounts they offer or the rules attached to certain bank accounts. There are fees you didn't bargain for when you opened the account, or they suddenly have new programs in place. However, if you are not reviewing your bank statements consistently, it is very easy to miss those. The second thing is interest rates. A lot of checking accounts today compared with a savings account with banks, and frankly speaking, those savings accounts might as well be interest free, 0% bank accounts, because the interest rates they offer are so low, and people often don't think to step outside of their bank, that the bank where they house their checking accounts, to look for high yield savings accounts. So there are a lot of them out there, savings accounts that are not necessarily offered by your bank, where you can park whatever savings you have for great interest rates. In the description box below, I am going to include, as of today, some of the highest yielding savings accounts that are out there, and they are easy to open accounts with. So that is something you should definitely consider, especially if you have a nice chunk of change sitting in your savings account that is not really earning you a lot of money. The third thing is using ATMs from other banks. I know it is very easy to go anywhere and use an ATM for the convenience of it, because some banks do not have their ATM machines, all across the neighborhood or the city wherever you live. However, there is a danger in doing that. For starters, if you are using ATMs in locations other than the banks where you have your accounts, for example, convenience stores, gas stations, you run the risk of being scammed out of your money, because those places tend to be susceptible to skimming devices. It is very easy for people to attach skimming devices and get your bank information and your PIN and so on, and use your card to make unauthorized charges. However, banks are regularly taking a look at their ATM machines, even on a daily basis, sometimes more than once a day, so that there's less risk of skimming devices being attached to bank ATMs. Also, if you are using an ATM that is not affiliated with your bank, there are very costly fees. The bank whose ATM you are using charges you a fee, and your bank charges you a fee. Now, certain banks will have deals with other ones about their fees, and you want to look into that. And if your bank doesn't have a deal with other banks, you want to consider making your trips to the ATMs a little bit more substantial. Probably if you're in the habit of taking out $50, maybe make it 100 or 150, or change money in the bank so that you have break down the large bills into smaller bills, so that you're not always making a trip to the ATM. But those fees add up over time in emergency situations, sure, but if it's not really a do or die situation, I would not suggest that you use the ATM from a bank that is not tied to your checking account. Now, something else people tend to ignore is the minimum balances. You cannot ignore the minimum balance for your account. You want to make sure that you maintain a balance large enough to avoid fees. A lot of banks have for their checking accounts minimum balances. The most common amount is $500, but there are banks, especially online banks these days, that will say $100. There are some that will say $1,500, $1,500 for their minimum balances. In other words, you have to have those balances in your account to avoid the fees. I would suggest having a little bit more than the minimum balance so that if something happens, you have a little bit of a cushion there. But you always want to make sure that you maintain a balance that is large enough to avoid the fees. The last point is transaction limits. This is something across the board clients often don't realize that banks have. This is especially common with savings accounts and with money market accounts, but more and more there are checking accounts that have these transaction limits. Essentially, the bank will say in a given month you get, for example, free deposits 10 times or 10 deposits into your bank account, free anything above 10 deposits, the 11th upwards, you get charged a certain fee. Or some banks will say you get 5 free withdrawals a month, so you can withdraw money out of the account 5 times. The sixth time onwards, they charge you a fee for it. So go back and look at the terms and conditions of accounts to make sure that there are no transaction limits. So those are the tips I have for us as you go through banking. Always make sure, once again, that you are reviewing your statements. Make sure that you are not ignoring transaction limits, minimum balances. You are careful which ATMs you are using, and make sure to shop around for a savings account that has a good interest rate. Good luck.